Hello everyone, this is Paris. Welcome to BudgetHolics. On December, I released a video on the Coinbase IPO. Coinbase tweeted that they're finally proceeding with their IPO and their company is going to be listed on the Nasdaq Stock Exchange on April 14 with ticker symbol COIN. In today's video, we're going to talk about changes in revenue and valuation and whether Coinbase is a buy or not. If you're interested in personal finance, investing and wealth building, including news of IPOs of up-and-coming companies such as Coinbase, please hit the like and subscribe button as this helps me immensely with the YouTube algorithm. Without further ado, let's jump into the video. Coinbase is a cryptocurrency exchange and one of the biggest in the world along with Binance and Kraken. Through Coinbase, you can buy, sell and trade crypto, but you already know that. One of the first major changes is that there is going to be no IPO. Instead, Coinbase is going to opt for a direct listing. This means that private shareholders will sell an amount of stock in the stock market, taking the unnecessary costs of investment banks out of the equation. In today's video, we're going to look into two documents published by Coinbase. The first one is their S1 filing, mentioned in their tweet. In their S1, we'll find information about their performance in 2020. The second document is a voluntary publication they made, announcing their results for Q1 of 2021. Starting with total revenue, Coinbase made $534 million in 2019. In 2020, they were able to double their total revenue, making $1.277 billion. They had an impressive income of $222 million, equating to a margin of 26%. 26% is a huge margin, and they can use this cash for various operations such as marketing and sales. More on that later. So we already know that they more than doubled their revenue in a year. How does this translate into Q1 results for 2021 though? Well, in the first 3 months of 2021, they made more than what they made in the entire 2020 financial year. From January to March, they had a total revenue of $1.8 billion. They also reported a net income of $730 to $800 million. In Q1 2021, their profit margin was from 40 to 44%. Moreover, in 2021, they reported 223 billion assets in their platform, representing 11.3% of the total crypto market space. And these assets are around 50-50 divided between retail investors and institutional investors. Their marketing and sales expenditure in 2020 was around 4%. With an increased revenue and an increased profit margin, increasing their marketing and sales expenditure would also greatly increase their client base. And indeed, Coinbase has an exceptional marketing strategy. You can sign up to Coinbase using the link below, and with your first $100 purchase of any cryptocurrency, they'll give you $10 worth of Bitcoin, which is an immediate 10% return on your initial investment. Check out Coinbase using the link down in the description. I always like to have my money working for me. And what I do for my crypto deposits is using BlockFi. BlockFi is a high interest rate savings account for cryptocurrencies. If you store your crypto on BlockFi, you can earn up to 8.6% APY. And if you sign up to BlockFi using the link below, you can also earn up to $250 worth of cryptocurrency with your first deposit. As I mentioned in the video on December, other platforms such as Robinhood are also going for an IPO this year. What gives Coinbase, a crypto exchange, a larger potential for more clients than stockbroker apps such as Robinhood is that it already has a much more global character. Regulations from stockbrokers across the globe are strict, established, and each platform has to fulfill the standards of the national regulator. However, with crypto exchanges, which is still an up-and-coming platform, the regulation has not been set in stone, and that's why more markets are more accessible to more brokerages. In terms of valuation, in 2018, Coinbase was valued at around $8 billion. However, according to a CNBC article, the latest valuation is $68 billion. This article was written on March 17th, and it reads, the latest valuation is based on a volume-weighted average share price Coinbase cited in a revised S1 filing released on Wednesday, which was March 10th. The company reported private shares trading at $343.58 a piece for the first quarter of 2021 ended March 15, which increases the company valuation 13-fold from the $8 billion back to 2018. Since then, the report for Q1 2021 came out, which, even if Coinbase made no money throughout the rest of the year, has already surpassed their earnings from 2020. But realistically, Coinbase is going to make more sales in the coming quarters of 2021. If we were to multiply the figure of Q1 2021, we would end up with valuation 4 times higher than $68 billion, which is around $270 billion. We yet don't know how this number is going to be priced in, but a valuation of around $300 billion is possible. More exchange IPOs are coming this year. Kraken is going public in 2022 via a direct listing. eToro is planning to go public via a SPAC, which, if you don't know what it is, check out my previous video, for which I leave a link here and down in the description. And Gemini's Winklevoss brothers have also teased a public listing. So keep in mind that when it comes to crypto stocks, Coinbase is going to face a lot of competition in the future. However, in terms of being publicly listed, it has the first mover advantage over Kraken and Gemini. Another thing to consider is that although it's called an IPO, you're not the first in line. The first people in line are private investors. And while you're able to get in early on the stock history of Coinbase, you're not getting in early on Coinbase as a company, which was founded in 2012. That being said, I do think that Coinbase is going to be a great growth stock in 2021 and beyond. And although we can't realistically expect the same results from Q1 2021 to be duplicated in the coming quarters, I do think that Coinbase is going to increase its client base, hence its valuation. When it comes to crypto stocks, their price goes up and down as the price of cryptos goes up and down. This is what happened with MicroStrategy and Bitcoin. However, with Coinbase, things might be a little bit different. Given the fact that 96% of the revenue comes from fees, I think that Coinbase will profit much more from the volatility in crypto prices than from mere increases. As a cryptocurrency such as Bitcoin is going up and down, more people are going to trade accordingly due to fear of missing out, or FUD, which stands for fear, uncertainty, and doubt. And this is where Coinbase makes money. So while Coinbase is going to profit from increases in crypto prices, I think that the volatility in crypto prices is their main driver of revenue. That being said, I'm not a financial advisor, and this channel is for entertainment purposes only. Do not rely on the advice of a single guy on YouTube, and always do your own research or consult a certified financial professional. These were the news we have for Coinbase's direct listing, which is bound to go public next Wednesday. Let me know down in the comments below if Coinbase is a buy for you and what are your thoughts about the company. If you haven't signed up to Coinbase and BlockFi, a high interest rate savings account, check out the links down in the description for up to $260 of free crypto for you. If you enjoyed this video, please hit the like and subscribe button and share it with anyone you think might enjoy it as well. Until we meet again, don't stop investing. Cheers.